And then the aging method. Aging method is a balance sheet approach in which we talk about the pattern of accounts receivables on the balance sheet. So we talk about that, okay, 1% of the account receivable, they are not collectible. So the base is not the sales, it's account receivable, right? So let's talk about that. So assume that the same entry, right? So Apple Incorporation accounts receivable aging schedule showed that company will not receive 98, and that entry would be the same. But let's talk about that. How are we gonna get this 98? So from our experience of our account receivable, for example, we know that if the account is outstanding for 30 days, there are 0.75% chances that it will not be recovered. If more than 31 days till 60, so this chances is increased to 1%. If between 61 to 90 days, 5% chances are that it will not be recovered. If more than 90, 10% chances are that it will not be recovered, right? So you find out this estimation and you categorize your account receivable accordingly. So we know that among the account receivable, so 10,164 will be received in 30 days, 600 will be received in between less than 60 days, from less than 90 days it is 200, over 90 days it would be 64, and all these figures are in million. So you just multiply these these percentages will be given. All you have to do is just to multiply and add to get this 98, right? So entry would be the same, since we already have balance in our allowance for uncollectible accounts. So this should be in our allowance, but 10 we already have, so that's why it is 88. The entry would be the same, uncollectible expense to allowance for uncollectible, 88 million, right? So if you don't understand the aging process, don't worry about that. It is normally the advanced accounting concept, but if you understand this, how we're gonna get through this, you're in good shape. So it's just all about that we're gonna post it here. So remember, the aging method tells you this balance. You already have the opening balance, so all you need is to create more allowance of 88. So this 88 becomes our income statement expense, and since this allowance is contra account of accounts receivable, so nothing happened here, right? Okay, now that question which we just left over there, that write off uncollectible accounts. So assume that at the beginning of the fiscal 2013, Apple has these account receivable in millions. We have RS, TN, and other, and we have a allowance for uncollectible which is 98. So total accounts receivable when you add it here is 1128, and the net is you minus 98, net is 10,093. So we already know that our accounts receivable are 10,000 approximately, after accounting for the allowances. So here in fiscal 2013, the credit department determined that Apple cannot collect from RS, which is 9 million, right? So it means 9 million of account receivable, which is RS, we cannot collect that, right? It means 9 million assets going to be decreased. But since we have 98 million of allowance, so let's talk about the entry. So bad debt occurs, right? 98 million, sorry, 9 million is not going to be recovered. So we do not charge this RS to accounts receivable, rather we make an allowance. So we charge this to allowance of account receivable or uncollectible here. So allowance for uncollectible, remember, if allowance occur, it will be increase or decrease. It will be decrease, because when you charge RS to the allowance, allowance will decrease. Decrease in allowance, debit to RS account receivable, right? So we directly charge account receivable to allowance for uncollectible or allowance for account receivable, right? So RS account is charged with the, so this 9 go to here and this 9 go to here, so the balance of RS is 0 and the balance for account receivable is now 89. So after the write-off, our T accounts would look like this. So remember, our accounts receivables are now 19 and our account receivable net is the same, 10,930, right? So this is how the smart managers, they keep stable of their balance sheet statements, so that they can plan better for the next for the future. So what is the impact of writing off? You have account receivable, previously it was 98, and now the bad debt or the uncollectible of RS 9 million is charged to the allowance. So now allowance has decreased, so that's why our account receivable is the same, right? Bit 5.4, it summarizes the percentage of method and aging method in a very nice format. Just pause the video and read it by yourself, and if there is any difficulty or any ambiguity, just please write us in our WeChat group or our Blackboard discussion group. I will be happy to answer.